Yeah, I don't know about that intro, huh? So the streaming software, I forgot to have a countdown timer, so I played the built-in one. Yeah, I'm not in love with it, but hey, man, we're building the airplane in the air with the Sunday night live stream. So welcome back, everyone. Let me jump right to the top of the agenda. Recapping the week, had an amazing week, both in real stocks, swing trades and day trades. Starting out with the recap of the week, NASDAQ up 6.7%, best week since January. And a lot of you know, I talked about it last Monday night and the week before. We saw the tariff scare, boo, the boogeyman. We knew it was all scare tactics. Only dummies sold during that period. It was an amazing buying period. As Warren Buffett, Warren Buffett's a quote machine. But my favorite Warren Buffett quote is always be fearful when others are greedy and greedy when others are fearful. So anytime you see a rational fear, it's always a buying opportunity. Like it just sets up beautifully. And then also, if you watch that interview I had on at the New York Stock Exchange, geez, time flies. I've been in New York City for the NYSE, Las Vegas, now I'm in Florida. It's been a busy couple weeks. I think that was a week ago. I talked about the Bitcoin bounce. And, again, it's just all this fear. They asked me, what do you think about Bitcoin? And I'm like, it's just sitting at support at 80,000. And if you go back the day that interview aired, Bitcoin was like at 82 something. Day after the interview airs, Bitcoin blows up almost to 100K. And listen, I'm not saying that the interview had nothing to do with that move. It's all just support and resistance. And again, if you can Google Tim Bohen cheddar, and it should be the first link that comes up. Look at the date stamp. Okay. You can look when it was recorded. It had nothing to do with what I said. It had everything to do with the technicals on Bitcoin. Same with the overall markets. But anyway, people trade on emotions, and that's why 90% fail. So NASDAQ up 6.7%, best week since January. S&P 500 up 4.5%, officially out of correction territory where all the bedwetters sell. Dow Jones up 2.48%. A lot of laggards in the Dow, though. Remember, a lot of people fixate on the Dow. I don't pay a ton of attention to the Dow. I focus way more on the NASDAQ and the S&P, mainly because, and a lot of you guys might know this, maybe you don't know, the Dow is only 30 stocks, okay? So when you've got 30 stocks in an index, if one or two of them has, a bad week, it can weigh down the whole index. So I think it's useful to watch all the indexes, but I almost exclusively only follow the S&P and the NASDAQ when it comes, and the Russell, and we'll talk about the Russell. But when it comes to the Dow, 30 stocks, it's kind of like, and then you got one stinker out of the 30, and it can weigh down the whole, or even vice versa. You can get a false read because you get a big runner, a big move out of 30 stocks, and it can kind of cloud the picture. So little tip there. Speaking of the Russell 2000, up 4.8%. Small caps ripping. Remember, the Russell 2000 is the 2000 smallest market cap stocks. Biggest weekly gain in small caps since November. And who's been screaming from the mountaintops? Small caps, small caps, small caps. That, you go back to the previous live streams, okay? I still remember, I think it was the first night. The first night we did the live stream, and it was a great question. The market was kind of shaky, and everyone, there was a great question, how do you hedge? And I was like, day trade small caps. That's how you hedge. That was, when did we start this? 3 weeks ago? 4 weeks ago? I can't remember. But you can watch the replays. They're all posted. I was like, the best way, first of all, don't sell your long-term quality stocks because of the fake news and the bedwetters, all the boomers selling. We talked about that, I think, week one. But if you want to hedge with your long-term holdings, day trade small caps. So anyway, Russell 2000, 4.8% on the week. Biggest weekly gain since November in small caps. Speaking of, we're going to talk a lot about earnings tonight. Google ripped after earnings plus 6%, smashed earnings expectations, and they're buying back stock. Always a big, $70 billion buyback. So when that's confidence. When they're willing to take their cash and buy their own stock, that's a good sign. Now, Google did kind of settle back on Friday, but I just think you had that huge rip. I mean, anytime you have a massive market cap stock like Google up 6%, there's going to be a lot of selling. Okay, there's going to be a lot of selling that's going to come in that will kind of slow down, and then you just wait for the second leg. But that's a massive move for a company the size of Google. Well, Alphabet, but we call it Google. Semiconductors had a good week. SOXX and SOXL. Keep in mind, if you want to trade these index ETFs, Oracle. Okay, Oracle is a great way to do it. A lot of you guys have it. A lot of you have heard about it. But SOXS and SOXL, very active semiconductor indexes. When they're volatile, when they're moving, they're on the Oracle algorithm. Every day they've got range. And that's the nice thing about the Oracle algorithm is if there's no range, like if the thing's not moving, it doesn't hit the algo. So anytime you see the leveraged ETFs hit the algo, pay attention. SOSX and SOXL, perennially on there, NVDA, NVDL, Tesla Q, the Tesla ETFs, etc. But anyway, the small cap index was up 4% on the week. NVIDIA started to catch a bid. Microsoft and Meta rebounded, which is why the NASDAQ was so hot. So jumping over to the calendar for the week, got a busy week. We're going into earnings season. We got Apple, we got Amazon, we got Meta, we got Microsoft, Moderna, Altria. I got my Zen handy. MO's got earnings this week. I'm looking for other Coca-Cola. Starbucks can be volatile around earnings, but those are the main names, main earnings watch. I'll get Apple, Amazon, Meta, Microsoft. I do love Altria. MO is a long-term hold, but it moves so slow. But just scanning the list. Again, Starbucks, S-Bucks, it can be frequently active around earnings. Big things we got this week. We got GDP growth, PCE price. That GDP, that's the key that the Fed really looks at, okay? That comes out on Wednesday. The consumer price index, the PCE price index, that's how the Fed really looks at inflation. That's coming out on Wednesday. And then we got the jobs report. That comes out 8:30 Friday. So put those on your calendar. Now, speaking of that, it is a blackout period for the Fed, okay? So many of you might know this, maybe you don't. Fed speakers are basically in a blackout period from yesterday to May 8th. And that's a roughly 12-day window around each of the FOMC meetings when the Fed officials are prohibited from commenting publicly on monetary policy or the economy. And it's been a long-standing rule, but just FYI, over the next week or so, you're not going to hear much from any of the Fed because they're in the blackout period. So just going through the calendar again, Fed Manufacturing Index on Monday. We already went over the earnings plays. Case-Shiller Index on Tuesday. Monthly home prices on Tuesday. Boatload of earnings on Tuesday. Then Wednesday, got a lot of data coming on Wednesday. I'm just looking for stuff I already went over. And Thursday, the ISM index, jobless claims on Thursday. And then we get the big one is the payrolls on Friday. So make sure those are all in your calendar. And listen, 3 weeks ago, the S&P was down 17%. Everybody was wet in their beds. The boomers were selling. Smart people were buying. Now we're back just down 6% on the year. And you think about all of this global trade war and all of this stuff, and the S&P 500 just down 6%, bounced all the way back from down 17%, and ferocious rally fueled by easing Fed fears, strong tech earnings, and then flip the strip, put the bulls back in control. So China signal it might suspend the retaliatory tariffs. Trump doubled down. Well done. Bigger tariffs. Tariff them to death, I say. Did you guys see? I don't know if you guys, I don't have the data handy, but the amount of money coming in from tariffs, they're already talking about massively cutting taxes. Now, this is something that I talked about months ago when the tariff stuff first came up. Guys, think about what's going to happen. Think about what's going to happen when there's so much, when all of this external income, the external revenue service, bringing in billions, trillions of dollars from all these terrible trade wars that over the last 50 years, ever since we got exploited post World War II. And, but anyway, the past is the past. We've talked about my feeling on offshore manufacturing. I think the very first live stream, I basically went completely off the rails talking about offshoring. So we won't go back there. But we've been, America's been exploited for 50 plus years with terrible trade deals that just helped everyone else and didn't help us. Meanwhile, we not only produce everything, but we consume more than anyone else. So if you don't want to pay tariffs, don't sell to America. Good luck. Good luck. Okay. Either pay the tariffs or shut down because that's your option. So anyway, back to the external revenue service. When all of these billions and trillions of dollars are flowing into the coffers of the federal government, well, they're going to lower taxes. They're going to slash taxes. You look at what Doge is doing. And this is the point from, this isn't an economic live stream. This is a trading live stream, right? This is a trading live stream. So because of that, think about all of that money coming back into the U.S. economy and more money in people's pockets. What happens when the average American, the average trader, has more disposable income? That's going to flow to the stock market, and that's going to create more opportunities, bigger, more prolonged moves. Small caps are going to get even hotter, even though they already are hot. Swing trades, long-term holds. I mean, you're going to look back at this last month. I think the last month, like if you were investing in an index, like just buying an S&P index, years from now, this last month, April, write this down, April 2025 will be one of the greatest opportunities to go long like an index. Now, I know we mostly focus on short-term trading, okay? We mostly focus on day trading. We don't really talk buying an index and holding 20 years. That's not really what we do. We're more short-term. But I'm telling you, April 2025 will be in my opinion, the greatest buy opportunity on a long-term index, probably in decades, because all of this money is going to flow into the stock market and we're going to go parabolic. Now, I'm not saying it's going to happen tomorrow or next week. These things take time, but it's going to happen. Okay. So back to my agenda. So back to earnings. Guys, eWhispers on Twitter. So, or X, it's just eWhispers. I compliment these guys all the time. I tell you, there's a lot of crap on Twitter, X, but eWhispers, guys, give them a follow. I don't know these guys, never met them, but I have followed this account for probably 15. Well, when did they join? 2010. That's 15 years. I've probably followed eWhispers for 15 years. And it's just what I love about what they do. Like if you go to their pinned tweet right now, it's just really handy. And it's, it's a free resource. That's the beautiful thing. Like you've got each day broke down and what they do. Now, remember, what they show you isn't all the earnings plays. It's not everything. But what they do a really great job of doing is giving you a small list, both before the open and after the close, of stocks releasing earnings that have a history of volatility. Like there's hundreds of stocks releasing earnings this week, but almost none of them are going to move. So what I love about this, again, give them a follow. It's free. They do a great job. And I just love their infographics because it just breaks it all down for you, whether it's before the close, after the close, by the day, etc. So take advantage of that. So big news that moved stocks this week was the offshore sector buzz, OMEX. Actually, I want to review OMEX. So I know a lot of you guys, if you had breaking news, and a lot of you guys know breaking news is built into the StocksToTrade platform. And we had those headlines on early in the day, Thursday, and OMEX ripped up. I didn't even see it, completely missed it, okay, because it went straight vertical. Now, this is a beautiful example of many patterns. Actually, let me zoom in and grab a 5-minute chart here. 2 days, 5 minute. So notice OMEX, and I want to spend a few minutes on this, okay, because this shows, and there was a lot of patterns in play here. And actually, let me recap OMEX, okay? Offshore exploration, Odyssey Marine, pretty low float stock, only 20 million shares in the float, had some news in a straight vertical move. Now, those of you that follow what I teach, follow the channel, you know we never, ever, well, I beg you not to chase the initial move, okay? Now, chasing works every now and then. This is where people always want to push back, and they'll be like, oh man, chase the green candles. Listen, it works sometimes. Sometimes chasing the initial move works. It's rare. It's very rare, but sometimes it works. Now, over time, chasing never works. Never works, okay? And I got to share my screen here. So I wasn't sharing my screen. Sorry. They're talking about getting me a producer. FYI, I'm a one-man crew. I wasn't sharing my screen. I'll go back to what I was saying on OMEX. So anyway, they're talking about getting me a producer because I appreciate you guys coming. So the reason I'm going to have some help is because you guys are, the numbers on these Sunday night live streams are awesome. So share them with your friends, subscribe to the channel, blah, 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 blah. I hate all that crap, but they tell me to say it, okay? Like, share, be sure to subscribe and ring the little bell. I know it's annoying, but they tell me to say it. So anyway, I'm sharing my screen now. So going back to OMEX, and let me zoom in on what we're talking about. So news drops, this stock was doing nothing, straight vertical move from 45 cents to 86 cents. And this is where I go back to chasing. So it's almost 100% move, but then immediately yanked back. So if you chase, man, you just gotta hope and pray. Now, the setup that I teach, and I beg everyone to trade, whether it be a dip and rip or a derivative of that, which we use a lot more in pre-market and outside of outside of pre and after hours and all through the day, is that RCT pattern. Okay. So right here, you can see, let me drop a line after the initial move. And I think, listen, chasers got rewarded. And this is where people battle me on chasing, because you could have chased OMEX and you got rewarded. You did. This one would have worked to chase. But a lot of you know over time, about 9 out of 10 times chasing never works. Now, if you use the methodology and a process in a disciplined approach, then I tell you to wait for that RCT. So you let the first initial move exhaust itself. Now, this is all based on 5-minute candles. I recommend not using 1-minute candles. Use what you want. Straight vertical move. And then you'll notice it put in a first red candle with the body. I ignore the wicks. The body of the candle at 84 cents. And the bottom of the candle was 72 cents. Now, I can show you I don't know how to screen share. A lot of you guys know you were on the webinar at noon. I could find the alert, but a lot of you guys got the alert. You traded it. You did well. I went live at noon right here. Okay. Right there. And I said, trade the RCT. Okay. If OMEX breaks 84 cents, you got a good trade. We talked about a $1 plus goal. And then we just use the bottom end of that candle for the stop loss. So what happened was it breaks it, goes $1 plus 20% trade right there within minutes, all with a very disciplined stop loss. And what's great about the RCT is it allows you to write a trade plan. Now, I get comments on the channel. People all the time, they're like, they're ranting about, how do I see these patterns? What do I look for? How do I have a trade plan? Because if you follow the channel, you've heard me say have a plan, have a trade plan 6,000 times, like literally 6,000 times. And a lot of people, and it's a good question. It is a good question. They're like, how do I write a plan? What does having a plan mean? Well, when I say that, what I'm getting at is waiting for this chart to set up and give you the plan. Give you the plan. So with that initial spike, it put it on all our radars. I missed the initial spike. I didn't even see it. We had a conference last week. I was in studio, but I came back at noon and I'm like, you know what? This is a beautiful RCT right here. And now, by using that candle to give us an entry and a stop, we now have a trade plan. We can actually trade like professionals at this point. So now we don't just randomly do stuff, randomly guessing, randomly buying at random prices. Now this is where people will also say, well, that doesn't guarantee you'll win. Well, yeah, no duh. No duh. Doesn't guarantee it's going to win. But the reason so many of you are struggling is you don't have a process and a plan for your entries and exits. You just buy and you're like, man, I hope it goes up. And what's worse is if it goes against you, now you're like, well, what do I do now? So by having a stop in mind using the chart, you can actually give yourself a trade plan of 84 by 74 with a goal of $1 plus. And that's exactly what it did. Now, a lot of people, little aggressive, a lot of people held this all day. I'm not in love with that. But if you notice, it never broke the stop. See those lines? This was the exact trade plan I went over live on Thursday. Now, I know a lot of you see people talking about OMEX Thursday night and Friday. Live at noon Eastern, we went over this trade real time. I didn't tell people about it Thursday or Friday. Live at noon Eastern. And if you notice, it never broke that stop. So a lot of people were a little aggressive. Gives me a little bit of anxiety. But if you followed that RCT plan, next morning, it was at $1.80. And you can see the zoomed out chart. It never broke the bottom of the 5-minute candle. That's trading. That's having a plan. And here's the deal. What if it did break the bottom of that 5-minute candle? 10-cent stop loss. 10-cent stop loss. Big deal. You got 1,000 shares, $100. That's trading. And this is why this is such an amazing pattern for risk to reward. Because, and I'm not saying anyone would have held from 84 to $1.80. Maybe someone did. But think of the risk to reward. So let's imagine OMEX didn't work and you lose 10 cents a share. You got 1,000 shares, you lose $100. Meanwhile, it went up $1 a share, which means the upside is $1,000. That's trading. So when you wonder, how do I get profitable over time? How do I grow my account? How do I get over the PDT? How do I become a full-time trader? It's by trading clearly defined patterns in advance of the move. Okay. OMEX was trading in the low 80s when I alerted it. And that's a pattern that works day in and day out. So that's a review of the RCT, guys. Again, just a beautiful trade on OMEX. And if you held overnight, I tip my hat to you. I think it was a little ballsy, but you got paid. Well done. And hey, it's not bad risk to reward. It's not bad risk management. If it never broke the stop, roll the dice. Okay, roll the dice. I don't like to use gambling analogies, but you had to stop, stick to the stop. So that's Omex, definitely in play next week. Guys, the full watch list is posted. Let me see if this works. I'm still working on comments. Yeah, there we go. Does that work? Yeah, it sent it. Cool. Okay. So stop. Oh, nice. This streaming software sends it everywhere. Man, when I get a producer, these are going to be awesome. So anyway, StocksTrade.com/watchlist. Normally, I review the watch list, but I'm running long on time tonight. You can go to StocksTrade.com/watchlist. All free. It's already posted. You can get it every Sunday. Top 5 stocks to watch. I do a video as well as break them all down. So hit that link, sign up. It's free. It's all free. So, and Omex still definitely in play. I'm going to skip the recap of the watch list. I normally do it, but I'm running way long on time. So earnings are here. So this week, so a lot of people ask, how do I trade earnings? How do I trade earnings? This week is loaded with major reports from big tech, financials, and retail. Now, much like anything, don't trade the initial move. That's where so many people get in trouble. We saw it with Tesla. Tesla, after earnings, cratered and came all the way back. Those that didn't trade the initial move, write this down. When it comes to earnings, this is one of my favorite quotes when it comes to trading earnings. The first move is almost always the wrong move. Write that down. And if you, whether you're trading earnings plays or you're just watching them, you'll see this play out over and over again. We saw it with Tesla. Earnings drop, big gap down. About 10 minutes later, the thing went parabolic and then ran for 3 days. And Tesla was on the Wednesday watch list for those of you that get that one. Wednesday night, after earnings, I'm like, Tesla's going to go. And it finished the week. It had an incredible week. So avoid the initial move, wait for the shakeout, and then trade the reaction. Never anticipate. When it comes to earnings plays, we never anticipate, we react. Let the initial shakeout happen. And this goes for shorting too. Now, I know most of you guys are long bias, okay? But when it comes to shorting, if you get a big gap up post earnings, remember what I just said. Write that down. The first move is almost always the wrong move. So if you're short bias and you get a massive gap up after the earnings release, and then it can't break the top of that, so it fails to make a new high, short it because it's probably out of gas. Profit taking is going to, we saw that with Google. Initial move and then faded off because of profit taking. So never anticipate, always react, and understand the first move is almost always the wrong move. Let me get back to my notes. Don't guess, trade the reaction, not the anticipation. Focus on the second move, the fade or the breakout, not the first move. Be patient. Use the best setups come after that initial rush. And that's a lot of you might ask why these earnings plays move like that. It's because of all these degenerates trading zero dated options. So FYI, the reason these earnings plays do all this wacky stuff right after earnings drops, it's because of all these freaking zero dated options YOLO people. They screw it all up, but it's the reality. It's all these YOLO, like you guys have heard of the YOLO trade, right? They buy these zero dated options into earnings, and it's basically, it's just gambling is all it is. Like you'll either double your money or lose everything. So that's why people like it. Degenerates, gamblers, alcoholics, cokeheads, they love zero dated options because they either double their money or lose it all. They like the fix. Reminds me of the Ed Sykota quote. Does everyone know the Ed Sykota quote? I'll read it to you. Everyone who gets, where is it? I don't want to misquote my boy Ed Sykota. Study Ed Sykota. He's an angry guy. Reminds me a lot of myself. He's a pretty angry guy, but an amazing trader. And he says, win or lose, everyone gets what they want out of the market. Some people seem to like to lose, so they win by losing money. Win or lose, everyone gets what they want out of the market. Some people seem to like to lose, so they win by losing money. I didn't say that. Ed Sykota said it. If you know Ed Sykota, you know he's the kind of guy you listen to. And that's what all this zero-dated options are. But at the end of the day, it creates a good opportunity because all you do is wait for that initial dust up to end and then join the trend to the upside or short the trend to the downside and just avoid the initial move. Just wait. Just be patient. Okay? So we went over how to trade them. Key names we already went over. And let me know. I'm supposed to do community engagement. What's your favorite earning plays? Let me know. Drop me some tickers. And we already went over Omex for the $1.50 breakup. Look, run your scans, use Oracle, and going to be a busy week. So again, guys, I think I hit everything on the agenda. I normally do way more Q&A, but I spent a lot of time on Omex, a lot of time on the RCT, a lot of time on earnings. So again, guys, I appreciate you being here. If you're wondering about the RCT more, keep an eye out. There's a webinar tonight going over everything about the red candle theory. It's at, what time is it? Keep an eye on your email, guys. What time is it? There's a webinar tonight on, let me look it up. 8 o'clock tonight. So keep an eye on your email. There is a webinar here in 28 minutes going all over the RCT pattern, how to look for it, how to find it. And I also now have an algo. So for those of you that struggle to identify RCTs, there's an algo that does it all for you. You know I love technology. You know I'm always working on new stuff. So definitely keep an eye on your email for 8 p.m. if you're interested in RCTs like Omex. And man, it was a beaut. Look at those purple lines. Look at those purple lines, man. And we didn't chase the initial move, waited for it to set up. And what's crazy is it never broke the stop loss and went to $1.80. So, all right, guys, thank you again. And I know I'm supposed to say it. Subscribe, share with your friends. We're trying to grow this. And I love doing it. I got nothing else to do on Sunday night except wait for the market to open at 4 a.m. So I enjoyed being with you. Have a great night, guys, and we'll see you next time.